In this video, we are going to look at application of Wyckoff method to Nifty and Banknifty. What are the common mistakes that traders make and why they reach to wrong conclusions despite understanding Wyckoff well? Let us dive into it. What you are looking at on the screen is the daily chart for Nifty, and you can clearly see that Nifty was in an extremely persistent up move. Now, usually traders will think that a Wyckoff consolidation or distribution will happen only sideways and then it will break down. All the while forming all the different phases, the phases starting from A to E. But you need to understand that Wyckoff distribution does not have to be horizontal. Whether it is distribution or it is accumulation, it does not have to be horizontal only. It can take different shapes and forms, and that is where traders most of the times get confused by what is happening on the charts and what they want to see. All right, let us look at this example. This is the Nifty chart. Again, a nice up move, and you can see here a couple of instances where you could clearly say that supply was coming in. They were quick rejections, but one very important thing that did not happen was they did not break below previous swing lows, or what we call as another reference that we use to monitor whether the trend has reversed or not. That is the last point of demand. And after that, you can clearly see that the value was moving up. So this was the HVN that formed, then you had a higher HVN, then you had a higher HVN. So as long as the value is moving up, the trend is intact. So here you can see, despite the trend was intact, there were a couple of attempts to sell and sell heavily. Okay, now how do we put it in context with Wyckoff? Well, these primary attempts of selling is what we call as primary supply in Wyckoff. Traders believe that it will only be one primary supply attempt and then a clean buying climax. It does not happen like that. You can get multiple primary supplies, and then even buying climaxes can be more than one. Markets are going to do their own thing. They are not going to constrain themselves in a framework or in a setup or in a pattern every time. The fact that people know about that pattern is the sole reason why those patterns may not work. And that is why I do not believe in pattern recognition. Instead, I believe in focusing on the logic. So here, couple of attempts to create supply, which did not give any purchase to the sellers. So the uptrend continued moving higher in search of sellers. Where do we get that from? We get that from auction market theory, where we know market goes up to find sellers and it goes down to find buyers. Now, this in itself is very difficult for traders to understand. Anyways, so we are moving higher. We continue to move higher. Here you can see market is moving higher. The range is narrowing. Again, a different kind of a buying climax. Now here you see a top forms, and we can call this as buying climax. Okay, now this buying climax cannot be confirmed by looking at this activity. It will be confirmed once we start to break below the last points of demand. Now this is where traders become impatient. This is where traders, I many times I get questions, why this cannot be a top? It can be a top. We really don't know whether it will be or it will not be unless and until we start breaking below the last points of demand. Now, when this top was forming, the last point of demand was this, and we were waiting for markets to break below it. In fact, what happens, you can see here, if I draw a horizontal line here from this last point of demand, we do break below it, but then we do not find acceptance in the first attempt. So we try to recover, we come back below again, we again try to recover, we again come back below. So multiple attempts were being made to break this last point of demand. The more number of times the market comes back to a particular level, the weaker that reference or that support or that resistance becomes. So here we made 3 attempts, and that made this particular last point of demand very, very weak. And this was an indication that the trend might be about to reverse. And when it broke below that, it confirmed that yes, the trend has actually reversed. Now, this is where the trend reversed. This is where it was confirmed. Okay, and once this kind of activity is forming where a previous last point of demand is not able to reject the prices back up, this is where you should start looking at short trades, not at this top. That is where most of the traders they fail to grasp this concept. Anyways, now this HVN was kind of repaired, then the time came for this HVN, and if I draw a horizontal line from this HVN, you can now see that we came here and again started spending some time at this last point of demand. Again, it was not a very good sign. Then we broke below it, but then the next last point of demand in line was this. This is somewhere around 16,600, and we reversed a little bit above that, and we started going back higher. We spent a lot of time here. There was a lot of exhaustion when markets went higher. This high, and this high were clustered very close. And then finally, over the last few days, we saw markets falling down and in fact tagging this 16,600. This is an important last point of demand, and it is expected for markets to show some support here. Will it cause a reversal? I don't think so. We will need more time to confirm that. But right now, you can say that, okay, this reference is going to provide some support. Now, where are the Wyckoff phases? So in this case, these two were definitely our primary supplies. Then this was definitely our buying climax. And once this two form, we complete the phase A. Do we know that it is complete? No. But then it is expected that market should go sideways, and it did. Okay. And then this was kind of our phase B. And then after that, what we need is a struggle between buyers and sellers, and then a test, and then a continuation to the downside. So, as I said, many people believe that Wyckoff phases should only form sideways. Not true. Here you can see we clearly broke down. People will start calling this as the test or the C phase. Not a good idea. Not a good idea, because then what will happen? If this is the C phase, then they will put this as the absorption of supply, that is D phase, and a very, very sharp down move should follow after that. Does not always happen like that, and they might get caught up in this sideways consolidation. In fact, this and this both combined formed only B shape. So this was primary supply, this was buying climax, kind of this completed the A phase, and then this consolidation and this consolidation form the B shape, B phase. All right. So now this small attempt to move higher and kind of a failed auction, we can say that, okay, this was the test or the C phase. And now we are coming back lower, and this important HVN / last point of demand is there. Now, if we absorb the supply here, then we are looking at a much deeper correction, and this will be in fact our D phase, and then the bigger fall or E phase will start. Now, this is how I would look at Wyckoff. I would not constrain it to be a horizontal correction only, but I'll keep my mind open for a different kind of a shape to develop, but give us the principles and the logic correctly so that we can look for good trade opportunities and not jump into trades before the confirmation sets in. Now, if this does not happen and we start to go back up, this whole thing will just prove to be some sort of correction. Then it will not be a distribution phase. It will not be a distribution phase. And then we will have to again re-evaluate all this thing to see if it fits the bill for a reaccumulation phase. And all that again will require a good amount of patience. And whenever this is confirmed, definitely I will share it in the Discord group, in my YouTube channel, on Twitter. But we will have to be patient. So right now, my money is on this D phase to form around this HVN. If it does not happen, then I will start to reevaluate my analysis and look for a reaccumulation. But if this D phase is proved or confirmed by the market, then what we have is a much sharper fall in E phase, a much persistent and much bigger fall going forward. So things will not be good for buyers going forward if this D phase is confirmed. Alright, so this is my analysis for Nifty using the Wyckoff method. Now let us look at Bank Nifty. Now Bank Nifty, I don't want to discuss this distribution, but I wanted to show a sort of a reaccumulation forming, but in a slightly different manner, okay, contrary to our expectation of a horizontal development. So again, you can see market is falling sharply. You can term this as sort of a primary support. All right, market is going down and you can classify this as some sort of a primary support. And then you can see this as the buying climax. Now again, many people who are trying to be purists, they will say that okay, this is not a buying climax. There are two attempts. Yeah, this also looks like some sort of exhaustion. I completely agree. But in the bigger scheme of things, given this strong down move, I think this first was definitely a buying climax, and the second attempt was also some residual selling, laggards coming into the markets and selling every pullback. That kind of a thing was happening, and I believe this whole thing constituted a buying climax. And then we started to move higher, and this is the first test that forms, and then we again start to move higher. Now this is where probably after this test is where the B phase started, and the B phase continued till probably this reference, okay, this consolidation and then small move down. Now here there is no clear C phase. There was no clear attempt to test the supply, let's say below the previous swing lows or this nice consolidation to give us a confirmation that yes, C phase is complete and now we need to look for a D phase. And this is again a problem with most of the retail traders who want the patterns to repeat exactly as they are kind of depicted by different great traders like Wyckoff. Okay, I completely I'm in awe of Wyckoff. I cannot look at markets without thinking about Wyckoff principles ever, but I need also to be flexible. So here there was no C phase. So what happens? Let me move this a bit. So yes, this is our primary support, this is our selling climax, and this is our first test, and this whole thing, sideways move is our B phase. And this small attempt in retrospect turns out to be the C phase or the test. Was it very, very clear when it was happening? Absolutely not. But then this happens. These two attempts to absorb the supply. This is a clear D phase. And I have over the years moved from looking for a C phase to confirming a D phase. I am no longer interested in this, and the reason is very simple. The B phase is marked with sideways moves, and in sideways moves there is often an attempt to expand the consolidation range, and we mistake that attempt to expand the range with a test, and then we are looking for a new trend to start and it does not start. So it takes a lot of effort. All right, it takes a lot of effort to ignore this test because it looks so good a trading opportunity. The risk is very, very low. But again, you need to play the long game here. You need to play the odds, right? If you're just looking for next trading opportunity using something as powerful as a Wyckoff method, that is gross underutilization of this powerful method. So I'm looking for D phase, and when I see this kind of confirmation, I then look for long opportunities. All right. So here what happened? If I move it a little bit here and a little bit lower, I was if I looked at the markets this way, and if I looked for this signs of absorption of supply, which is nothing but D phase, that last minute absorption of supply by the smart money before a nice sharp up move can begin. So here the market moved higher sharply, and this long trade would have been very, very profitable. So again, you can see at this particular chart, it is very clear that the accumulation phase, primary support started here and it ended somewhere here with absorption of supply. So you can clearly see this is a weird kind of market development. All right, it is definitely not horizontal, it is definitely not a copybook style market development, and you need to be cognizant of the fact that this kind of market development will occur. Okay, now there will be many people who will cram the Wyckoff phases in this small range, and then what happens is maybe they buy here and they get stuck in this consolidation. So if you rush into forming judgments on Wyckoff phases, please understand you will find yourself getting frustrated more often than enjoying a nice clean up move over the next few weeks, instead of getting trapped in this consolidation for months. So you have to be very, very careful with your assessment. Alright, so that is exactly what I wanted to discuss in this video. I wanted to show you examples of couple of Wyckoff market schematics developing on the chart, where you could look at a kind of a different take on how Wyckoff market schematics are applied on real-time markets. They will not be a copybook examples, textbook examples. They will have tons of variations, and unless and until you can accept these variations, unless and until you can say that yes, markets won't always be very, very linear and predictable, you won't be able to take advantage of such developments. So I believe that you really, really like this video. If you like this video, then give it a thumbs up and share it with your friends and colleagues. And if you are not yet subscribed to the channel, I think this is a very good opportunity to do so, because we will be bringing up many such videos going forward. So I hope you like this one, and I'll see you in the next one.